Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. This is a quick video preview for the webinar, which is going to happen in a few moments, so stick around. Hopefully you'll enjoy it. Look, geopolitics, this is what's the driving force right now, at least it seems like that, you know. We do have important economic data sets coming through today. We have the US PCEs coming through. However, it seems like everything is getting overshadowed, you know, by geopolitics and, you know, what's happening in the Strait of Hormuz. Look, ladies and gentlemen, we'll talk about markets. We'll see what's happening. We'll see what's happening with different asset classes. So stay tuned. Hopefully you'll enjoy the session, and I'll see you in a bit. Ladies and gentlemen, hello, good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today, ladies and gentlemen, is Friday. Yes, the 20th of February, 2026. Look, we're going to talk markets, the usual stuff. We're going to check out the charts, see what's happening, to find some interesting setups on the charts. But yeah, look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Look, as I keep on reminding everybody that this session is made for live interaction, and that's why I'm running it live. So feel free to ask questions if you have any. Just jump in, and we'll go from there. So, ladies and gentlemen, also just before we go any further, a quick mentioning of our Markets.com website. For some reason, the screen is not. Oh yes, I think. Just bear with me one moment. Let me just check what's happening here. Wrong screen, ladies and gentlemen, wrong screen. There we go. Okay, there we go. So apologies for a little technical hiccup here. My fault, totally my fault, because again, I should have checked this the screen before the webinar, but hey, you know, these things happen. Look, okay, so yeah, like I said, check us out, check out our website for more info. If you have any questions, you can always reach out to us. Yeah, ladies and gentlemen, let's check out the economic calendar very quickly. Let me just refresh this one. Now look, this week so far, we had some interesting data sets coming through. You know, yesterday, for example, we had unemployment numbers from Australia. Those came out at 4.1, the same as previous, although the expectation was for a 4.2. Also, we had some other figures coming through, the trade balance from the US and Canada. So the Canadian one came out with an improvement, to be honest, with a minus 1.31 billion in Canadian dollars, compared to the previous year, the 2.59. Whereas the US, there we go, look at this, the trade balance minus 70.3 billion US dollars. The forecast was for minus 55.5. It was already a little bit on the higher side from the previous, but hey, there we go. The US got a substantial increase here from the forecast. Honestly, not very good in terms of, you know, if you're going for the idea that everything has to be built and made in the US, and when you're getting a trade balance like this, then I'm sorry, but this is like, you know, you're importing a lot. So anyway, in terms of the numbers, import numbers, look at this. Import, or maybe you're exporting and not enough. Basically, where are those U.S. exports? Let me just double check. There we go. So a little bit of a drop here in the exports. Imports, yeah, and there we go. An increase in imports. So, okay, look, can I say it's it is what it is. I mean, you have a drop in exports, you have an increase in imports. You were already doing that a lot, so when you're adding more to it, then certainly you're going to get numbers like these. But anyway, ladies and gentlemen, the Philadelphia Fed Manufacturing Index yesterday came out. It came out as an improvement, 16.3 against the previous 18 point. Sorry, the previous 12.6. The forecast was for on the lower side, but it came out on the higher, so that's in a way a good thing here. But look, all eyes are going to be today on the economic data. Now, first of all, I want to kick off with the flash S&P Global Composite Manufacturing and Services PMIs from Australia. Those were a little bit on the lower side, and that's not good. So maybe this is something that the Australian government will have to start thinking about. Maybe they're already thinking about it, but certainly an increase in interest rates is not something that can help this, in my opinion. However, if you're trying to deal with inflation, you need to choose which is going to be the less of the evils, or the bigger evil actually that you would need to deal with. So long story short, for now, what we're seeing here, yes, is a decline. Japanese inflation numbers came out this morning on the lower side, so yeah, basically kind of telling the BOJ that you need to cool down with the potential hikes going further. So this is what could push the BOJ rate hikes further. So for now, I would say it's still an interesting subject. I think the Japanese government really wants to do everything so that the Japanese central bank wouldn't go for that hike, and maybe showing lower inflation numbers is something like that. So then it's difficult to justify the rate hike, the future rate hikes. Nevertheless, we'll see how this develops further, of course. But yeah, for now we're watching everything. The flash, also the S&P Global Flash PMIs came out from Japan. Composite Manufacturing and Services PMIs. Those came out on the slightly I would say on the higher side, yes, and in a way that's showing that again, why do you need to go for those, or actually on the contrary, no, you need to go for a rate cut in that case, sorry, rewind. I think I'm already getting myself into a spiral here of wrong information. Look, the PMI's numbers came out on the higher side, so in a way that means you don't need to go for those rate cuts, because again, the economy is kind of doing quite well. Now, what can I say is that should you go for those hikes? Well, again, as well, if we're judging just purely from the inflation numbers, then no, then we don't need to do that. So it's like I said, it's an interesting chess game that I think the Japanese government is playing. That everybody's playing around the world, the U.S. as well, because the U.S. is not interested in the BOJ to go for hikes. So because of all the carry trade, and how it could pull investors out of the U.S. debt. So yeah, ladies and gentlemen, for now, like I said, watching this data. Bear with me one moment. I need to clear up my nose, I think, because again, I'm still feeling under the weather a little bit. So apologies. I'll be right back with you. And I am back. I do apologize for the little technical pause here, but yeah, it's you can hear that my voice is still very, how is it, deep and attractive. Uh, but yeah, certainly a little bit of feeling under the weather still kind of is catching up. So anyway, long story short, for now, what we're seeing here on the UK side, retail sales came out. Look at the numbers, ladies and gentlemen. Boom, to the upside. So basically, everything is looking very, very good. Um, everything is really fantastic, I would say. There's no problem. The consumer seems to be feeling very well. Well, I mean, this is delayed data, so if I'm not mistaken, let me just double check very quickly. I think that was December number. These are December numbers. And let me just double check, or was it January? Let me just quickly double check. January, right? Retail sales. Yeah, it was January. So in January, apparently, like the consumer felt very good, and we saw, we saw some good increases in sales. Is it going to be the same for February? Well, I'm leaning towards the idea that no. I think that's I think February is kind of more of a recovery saving moment, here. Going further today, we're going to get the HCOB composite manufacturing and services PMIs, the estimates for both Germany and the European Union. S&P Global, same data sets, but just provided by the S&P Global for UK numbers. So we're going to get that, so check it out. And then of course the main focus will fall on the US core and headlines PCE figures. So yes, so the the personal consumption expenditure price index, yes, that's something that we're going to be keeping a close eye on. The current expectation is to see a slight tick up from the previous figure. On the core, on the headline, on the headline, it's kind of flat. It's basically the same 2.8 that we're expecting. On the month-on-month figure, on the headline number, yes, a small little 1/10% uptick is expected. We'll see if that comes out as expected. Certainly the same story as on the core. But the GDP number, now that's also something that we're watching, the GDP growth rate, and then that's also the kind of the advance number, and we are kind of expecting a little bit on a lower figure. So let's see how the market reacts. And in general, I think that if I think the PCE will be the more interesting one. Normally, if the EPC comes out on the higher side, I think that should be a bit of a negative for the stock market. So again, if it comes out above the forecast, now not let's say above, okay, on the headline, yes, the forecast is the same as previous, 2.8. On the core, it's 1/10% higher. So if it comes out, let's say at 3. Now that's where I think that the negativity could come in on the side, in the indices, for example, right? Because again, theoretically this implies that the Fed should go for a cut and blah blah blah, but we know that that's not going to happen, okay? Because right now politics is the driving force that kind of determines what's going to happen next in a way. Look, for now, like I said, in the normal world, in normal times, maybe this then market could react to higher numbers in a negative way, but at the moment, I think that yes, everybody's on the edge, and everybody wants to see what's going to happen with the tensions in the Middle East. Yeah, especially with between the U.S. and Iran. So that's something that everybody's watching. This telenovela, which doesn't really have a good ending, So we already know that. So it's a pointless conflict where somebody's trying to flex their muscle in a way, but for them, everything is allowed, right? For them, everything is fine. Anyway, we'll see how it goes, of course, but certainly it's a sad moment. What can we do? Like this is the world that we're living in. One country is allowed to do certain things, the other countries are not allowed to do the same things. So it's a very hypocritical world that we live in. Anyway, so yeah, we'll keep your eyes on the numbers here. The Canadian PPI figures are also coming out, so watch out for those. Retail sales from Canada as well, something to keep in mind, and also the U.S. S&P Global again estimates, the composite manufacturing and services PMIs. Michigan consumer sentiment, something that could give a little bit of a little bit of volatility in the market. So again, a bunch of data, which is quite important, and I think that to there these data sets could determine, or not determine, sorry, but could impact the stock market, the US dollar index, and we could see some swings here and there, but certainly the overall direction of the market, I think is going to be determined by what's going to happen in the Middle East. Now, look, let's jump into the charts, ladies and gentlemen. So, yes, the markets are shaky. The markets are worried. Nikkei 225 is currently kind of stuck here. I talked about it. Look, I mentioned this, that if we do clear one of the sides here of this little range here, then okay, great. We could consider the next short-term directional move. So, for example, if we do drop and stay below the 56,652 territory, somewhere around here, then yes, I will consider a larger correction back down. And initially towards the 20-day SMA, wherever it's going to be. Currently, it's around, on my chart, around the 55,163. But again, that changes. It's never the exact level. It's always the area near that level. And if that gets cleared, yes, I will aim for this upside line drawn from the lowest point of April of 2025. And then we'll just take it from there. For the upside, I would prefer to wait for a push above the 58,000 territory, and then we could go higher. So at the moment, long story short, for now, I am just, I am keeping a very close eye on this little tight range, and I'm waiting for a clearance. China, there's no point, because again, still on holiday, guys, enjoying their life, enjoying the celebration. Fantastic, why not? Why not? And they're coming back on Tuesday, if I'm not mistaken, next week. So keep that in mind. So let's jump into the US indices, ladies and gentlemen. Let's see how yesterday they performed. Okay, yes, a little bit in the negative territory fractionally, but look, what's interesting here, I talked about it, and I said to you that for now, this this looked quite bearish, and I said that if we do drop and stay below the 49,621 territory, I will continue targeting the downside. And well, there we go. Kind of remained below this area, and so at the moment we're seeing some weakness, and I think that yes, further declines here could be possible. We'll see how it goes further, of course, but certainly at the moment everything looks quite bearish. I think that the market doesn't like the fact that there is a possibility for an attack on Iran. So yeah, that's something that I think, look, certain companies will benefit. We know them. Just a second, I'm trying to access another platform here very quickly on my side in order to understand a slightly bigger picture here. Okay. So, currently the index is trading around 49,480. So basically above yesterday's close. So still somewhere near the 20-day SMA within the Bollinger Bands that I have here on my chart. So yep, look, I'll say it this way: as long as we stay below this hurdle, I will continue targeting the downside. For me, the upside scenario. Now, my upside scenario is a little bit on the tricky part. Look, previously I talked about this 50,115, but I think now, yes, this is still a good area to keep an eye on, but I think yesterday's high, Wednesday's high could be the more attractive option, the 49,000, kind of, let's round it up here, 900. And if we do clear that one, I think that yes, potentially more buyers could join in. For now, I am, like I said, I'm cautiously bearish, but certainly some confirmations are still needed. The S&P 500. So look, I talked about this before as well. 6,870 is the barrier that I'm watching. Currently, the S&P is trading at around 6,877. So basically, we're above this hurdle, above that 50-day EMA, and for now, I think that the upside scenario is kind of not off the table, don't get me wrong, but again, it's a conflicting story here, right? One is showing willingness to go lower, the other one is kind of leaning towards the, towards the upside. That said, um, the cash index right now is trading a little bit above the 6,871 territory right here. But when it opens up, when the market opens up, I want to see if it's going to stay below this area. If it does stay below the 6,870, I think that maybe it could follow suit here with the Dow, and we could see move a little bit lower. So again, keep that in mind. Let's see if that's going to work out. But for now, I think if you're looking for some higher levels, then probably the better option is just to wait for a push above the current highest point of this week near the 6,909 zone, and then we'll just go from there. The Nasdaq 100. So look, this one's interesting because I talked about it and I said to you that maybe this one's forming something of a maybe descending triangle pattern or something like that. We have ourselves a downside line. We have our key area of support near the 24,455-ish zone. And if we do clear one of the sides here, then okay, great. We'll consider the next short-term directional move. So, for example, if we do drop below the 24,455, yes, I'm gonna aim for that 200-day EMA. But for the upside, I would actually prefer to wait for a push above the 25,383-ish zone. Why? Because look, if we break the downside line, okay, that could open the door to some higher levels. It's up to you to play the game, but then we have some obstacles on the way higher here, the EMA is here. So yeah, it's a little bit of a tricky moment in that case. There's more there are more kind of obstacles, but if we do clear that 25,383 territory, then hey, maybe, like I said, this is where more buyers could join in, because maybe we'll have ourselves something like a double bottom formation here with a neckline being here, so yeah, this is something that's kind of runs through my head, and maybe this could work. But again, initially the break of this downside line is required. The German index DAX. So look, okay, now this one's interesting. Initially on Wednesday I talked about it and I said to you that look, we cleared that 25,000 kind of 100 zone, we stayed above it, and we kind of we're pushing higher, and this is what I was sticking to in a way. But now we fell back below this 25,100, and actually we're flirting really flirting with that psychological 25,000 zone. So if that gets cleared, I think that there is a chance of a kind of a correction back down here. Also, I want to see if this is going to work here. Yep, yeah, something like that. So if we do break this little short-term tentative upside support line drawn from the lowest point, the current lowest point of February, then yeah, I think that more sellers here could join in, and we could see something like this happening. The FTSE 100. Okay, the FTSE is very interesting. It, on one hand, it has the full opportunity to go higher because this formation somehow tends to be a positive one whenever you have it's like a very short flag, bullish flag. So you have a strong pole, and then you have the candle to the downside the next day, but it's roughly around 50% of the first candle, and then yeah, we have an explosion to the upside. But look, if you like this idea, but you're thinking you're struggling to kind of force yourself to enter something like that, then I think that what's best is just to wait for maybe a break above the current all-time high near the 10,715. If that happens, great, more buyers could join in, so keep that in mind. For the downside, well, pretty straightforward. I think that for me personally, if we start falling below the low of yesterday near the 10,000 kind of 600 zone, then yeah, I think I will go to the downside. I will go lower here. Okay, so DXY, dollar index, dollar index. Now this one's interesting. It's forming something of an ascending triangle pattern, and you know, it's forming something like this here. So is this gonna pop higher? In a way, it could. Don't get me wrong. It surely is looking a little bit on the stronger side. If I jump into actually a monthly chart, it's showing that we're still stuck in this range, right? We're still stuck in this range after like a sharp reversal back up here. On the weekly, it looks very good actually. It gave us some false breakouts, and yeah, it's now pushing higher, and it's kind of currently flirting with this 97. Actually, I would say 98 territory. You know, we need to see a clearance, a good clearance of the 98 zone, and if that remains. If that remains, you know, here in you know, a possibility. Oh, actually, a possibility always remains. But you know, is if the interest, the buying interest, is still there, then I think that we could clear that 98 zone. So if we do it, then I'll go maybe actually back to this 99 point, kind of 99.5 territory. Very quickly jumping into Forex, ladies and gentlemen. So yes, this one is drifting back down. So look, I talked about it on Monday. I said to you on Wednesday as well that we're, you know, forming something of a weird kind of head and shoulders pattern initially, but then, you know, during the day we had some spikes here up and then a quick major reversal back down. Look, it got itself into a bit of a mess here, so I think what I'm going to do, I'm going to remove all the drawings and have a fresh look. Now, what I'm seeing straight away, and this is what sometimes, you know, the lines do kind of overshadow some other pictures, you know, some other interesting formations. And what I'm seeing right now is kind of a little bit of a retracement, a gradual retracement, and a hold up above the 20-day SMA here within the Bollinger Band. So that's why it's actually not pushing me towards the downside yet. You know, my downside scenario, actually, I think I will consider from around here. On a drop below this 0.7010, which is marked by the inside swing high of the 5th of February, if we do drop below the 0.7010, then yes, my next target is somewhere around here. Let me just put it here. There we go. Somewhere around this area, the 0.69 zone. Again, approximately. This is going to be what I'm going to be aiming for if we do drop below the 0.7010. For the upside, if you were wondering, I'm going to take a very conservative approach, to be honest. I would prefer to push above the 0.7147 actually in order to get a little bit more comfortable with the upside. However, I think I'll start looking at some higher levels if we do clear this downside line here, right here, which is taken from the high of the 12th of February. If we clear that, I'll go to the upside. Jumping into AUDNZD. Okay, look, with AUDNZD, this one's, yeah, I talked about it. I said, like, if we do stay above the 1.1693 zone, I will continue targeting the upside. There we go. We are beautifully moving higher, and the monthly chart looks, wow, spectacular. Look at this. Eventually, don't get me wrong, this will have to go down, and whatever comes up must come down, you know, at some point. But the fact that we're really climbing higher right now, and if you ask me where the next little target could be for now, at least for a pit stop, what I'm going to do is I'm going to drop from the highest point of 2011 all the way to the lowest point of 2020. That's when that's when COVID was. So basically, the 1.1895, 96, 95, something like that, around there, is becoming quite an interesting target, because this is the 50% on the Fibonacci retracement, which is drawn, like I said, from the highest point of 2011 to the lowest point of 2020. There we go. We are, like I said, approaching the 50% here, which is quite nice. So let's see if we can do that. Let's jump into AUDJPY. This one's pushing back up, or at least trying to push back up. And At the moment, again, if I do a little Fibonacci retracement here from this peak to this low, then you'll see that we have retraced 61.8 already. So the question is now, is it going to stall there, or is this Fibonacci a little bit too small to, kind of have any normal credibility? So I would say this way. I said before that if we do clear this 109.37 territory, then yes, I will go a little bit higher. So for now, probably I'm going to stick to my words. And if we do remain above this hurdle, then yes, I'm going to go towards that 110.79 zone. Let's jump into EURUSD. Yesterday I talked about it. Said, look, we're forming something like a possible descending triangle pattern here, and yep, there's potential for some downside. And at the moment, you can see that we have dropped below the 1.1776. I talked about it on, not yesterday, but on Wednesday, and we got the move, but we didn't get a strong move. But hey, look, depends on the PCE number. If that somehow, if that comes out on the higher side, maybe the US dollar could, see a little bit of a positive moment, and this could lead further down the line here on the Euro USD. But in general, yes, even if in the short run you're maybe looking for some lower levels, but let's not forget that we're still on an uptrend, a little bit of an uptrend. So this is what we're seeing right now. Could be just part of a larger correction back down before another possible leg of buying. So keep that in mind. EUROJPY, just a second, what's happening here? Okay, if we somehow remain below the 182.64, probably I'm gonna go lower. That said, for those who are a little bit on the cautious side, I think a drop below the 180.81 zone here, something like that, would be required. Because at the same time, we could drop below the 100-day EMA shown as the blue line. Okay, going down the line as well, very quickly, and actually on EURUSD, I just wanted to double check this one. Okay, this one's interesting actually. Look, if this is going to fail to go for, let me get rid of all the drawings. If this is going to fail to go for a lower low, and we see the body of the daily candle, for example, staying above this hurdle, this 1.6624.25, I think that there is a chance of a rebound back up. Now, what could happen here is, let's say, we could see a drop lower, a strong move to the downside. We pierce through this barrier, but then by the end of the day, we travel back up and we stay above the 1.6624. This way, like I said, to me, that would be a little bit of an indication that maybe we're ready for a slight reversal back up here. Because let's face it, for Forex pair, it has been a good move to the downside, and maybe, it's time for a little bit of a retracement. But again, if the bigger plan is if we do drop and stay below the 1.6622, then certainly, yes, my next target is this 1.6358. Let's jump into actually, by the way, whoever's watching right now, ladies and gentlemen, as I keep on saying, this session is meant for interaction. So, feel free to ask questions if you have any. I'll try to answer those. So, and we'll go from there. GBPUSD, ladies and gentlemen, yes. Okay, we broke the upside line. That's great for the bears. We broke it, okay. But now the question is, are we gonna stay here below this 1.35 territory? I talked about it, and I said to you that if we do remain below the 1.35, my next target is the 200-day EMA together with this 1.3346. Look, again, at the moment, I would say it is an interesting situation here. Again, keep your eyes on DXY because again today, we're going to have some data, and we'll go from there. Because at the moment it's difficult to speculate. We do have some important economic data sets coming through today, so watch out. Where is that? UK. Where is that UK? UK already got the retail sales. We are getting the flash PMIs from UK, so that's gonna happen in a bit. Should be 11:30. Okay, yes, in about an hour's time. So okay, we'll keep an eye on that. Okay, so USD CAD, USD CAD. Okay, this is interesting. So now it's getting a little bit of a slowdown here. So I talked about this idea of maybe a symmetrical triangle formation, but then you look at the prevailing trend. The prevailing trend is to the downside. And what's interesting here, now I talked about GBPUSD, EURUSD, that there's potential for some downside in there, but we need a stronger dollar. So maybe the positive PCs, higher than expected PCs coming out could help those pairs to go lower. But here on USD CAD, I'm also expecting a little bit of a move back down, to be honest, as long as this upper side of the triangle holds. Now it doesn't, it a little bit conflict a little bit. So on one side you're hoping to see your weakness in the US dollar, but sorry, strength in the US dollar. On the other side here, you're saying weakness. Well, I'm actually thinking that the Canadian dollar could strengthen purely on oil, because at the moment we know that there is military buildup in the near the Strait of Hormuz, in the Oman Gulf. So yeah, it's something that it could push the Canadian dollar higher, just despite, let's say, the US dollar strength or something like that. I think it's just like I said, if oil flies, if the price of oil flies, CAD could fly as well. USDJPY very quickly. So this one's pushing higher. Look, I said to you I'm going to stick to that. On Monday I even said that maybe we're coiling up here, so a path towards this upper side of the little triangle pattern that we have here maybe could be nice. Look, we have ourselves a descending triangle pattern, which like according to all the TA rules tends to break to the downside. However, at the moment, I would say it's we look at the prevailing trend. The prevailing trend is to the upside, so we kind of have to stick to the idea that maybe we could see a pop higher. But hey, I think everything is going to be momentum, so just keep your eyes on the downside line. This one right there, which is taken from the high of the 23rd of January. If we clear that one, I'll go to the upside. USDCHF, there we go. We pushed through the upper side of this triangle, and now the question is, can we see another decline? Well, I would say it this way, that for now I will stick to my guns, and I will have to say that I am leaning towards the upside a little bit here, because we broke the upper side of the triangle. So my next target is the 50-day EMA shown as the green line, sorry, and the area near the 0.7829, and then we'll just we'll go from there. Ladies and gentlemen, let's jump into the commodity world. Gold is back above 5,000. So I talked about this on Monday, and I said too that currently we're just oscillating around the psychological 5,000 zone, right? We keep on testing it, we're breaking it again and again. So we're kind of seeing a little bit of range action here. So if we do get a clearance through one of the sides of that range, then yes, great. I will consider the next short-term directional move. So look, if we do pop somewhere above the 5,092 territory, then yes, great, I'll go higher. But if we do drop and stay below this 4,878 territory, then wonderful as well. I will go to the downside. So yeah, at the moment, like I said, with gold, it's it's less exciting. I think the crypto world is more exciting right now, but the precious metals, they eased off a little bit. So until next time, don't get me wrong. And another thing is that, look, I said before and I'll say it again, whatever comes up must come down. This is a monthly chart, honestly, ladies and gentlemen. We haven't had a parabolic move since what? Since 2020, end of 2023. Wow, this is a very, very parabolic move. So from here all the way, from 2.5 to all the way to 5. Wow. Okay. Silver story here is that the precious metal is trying to recover a little bit. I think that maybe they can actually do that. Maybe they could succeed in a push higher, but it's very difficult right now. It's very tricky, so I don't want to rush into things. I'm kind of leaning towards the idea that for this month the candle could close in positive territory. But again, you know, I don't have a crystal ball. So, but one thing for sure, it seems like this falling veg idea could be working out a little bit earlier. And if we do clear the upper side of it, then yes, great, more buyers could join in. Look, although my heart wants to see lower levels on this one, I have to, my brain says that actually this is going to lean a little bit more towards the upside, because this is one of my favorite patterns, that whenever we have a strong drop lower and then a gradual decline, we tend to break out higher. So that's why I am just kind of a little bit on the careful side for now on this one. And we'll see, of course, we'll see how it goes further. But for now, yeah, it's looking a little bit more on the positive side. Gold and silver. Gold is depreciating again against the silver here, so it's you know, only 63 times more expensive than silver. So yeah, gold is you know, roughly 63 times more expensive than silver, and that was the different case at the end of January, you know. So yeah, we were below 50, so that was an interesting moment. Anyway, so just to let you know that such moments don't happen very often, and such moments happen. Well, look at this. This is 1980. This is 2011, and this is now. Does it ring a bell? Do you remember something that I was talking about for a long time now? This is the spike we saw in 1980. This is the 2011, and this is now. So at some point, it will have to correct lower, and this is where this ratio could, you know, reverse back up here again. Platinum. Very quickly on platinum, we're still in the monthly chart, but actually I want to stick to that because this is what I talked about, the 2,299 zone. I mentioned this area a lot, and I said that if we do remain, we can pierce through it, but if we do remain below it, I think that this is where the more interesting part comes in. So long story short, this is the barrier for the upside in my opinion, this 2,299. If we clear it, I'll go higher, but if we don't, yeah, a little bit of a retracement back down here could be possible. Okay, palladium. Palladium is, it's currently forming something interesting, something positive. So maybe it could, you know, go hand in hand with the silver, and you know, silver could push further to the upside other precious metals. Copper. Now copper is the one that kind of doesn't give a damn, and it seems like with copper, you know, it just does what it does, and you know, supply chains, that's what we need. And at the moment we're resting near the 1,156. So let's see if this can be cleared. If we can, then yeah, great. I'll go to the upside, maybe back if it cannot get cleared here. Very quickly on sugar, we are flirting with that psychological, well, actually not psychological, but we're flirting with that 14 level. And if we somehow climb back above it and stay above it, or actually we're above it right now, but if we continue to stay above it, then yeah, great. I'll you know, consider some higher levels again. WTI oil, ladies and gentlemen, this is what the world is worried right now, because again, because of the US, nobody else, but just because of the US, and we're currently seeing a hold up near this downside line, which is taken from the highest point of 2022. And yeah, since then we have been declining, and to be honest, I'm kind of not really in favor of the downside. To be honest, I'm kind of leaning a little bit more towards the downside. But given, you know, the action that we're seeing today and yesterday, in general this week, it's kind of leaning towards the idea that, you know, we could see a pop higher here. But look, I don't want to rush into things, okay? I don't want to say anything, but certainly this is quite interesting right now. Let's see what's going to happen. For now, I am being very careful and cautious with this commodity, because we are going into a weekend, and normally, if you remember, I said that if you want to attack another country, normally do it on a weekend when the market is closed, because you don't want to do it on a, when the market is open, because you normally do it on a Saturday. Then you on a Sunday you have some damage control to do, like speeches and blah blah blah, that everything is still okay, we support the market, and the market doesn't do a crazy move on Monday. It doesn't make a move. It's depending on the severity of the problem, but it does make a move. But then at least oh, it's okay. It's gonna be like only a small bombing. It's fine. So it's like as if it's a normal thing. But yeah, like ladies and gentlemen, like I said, you keep your eyes on this. If you have positions on oil, I would say weekends, honestly, avoid holding any positions on that. Brent oil, now this one's popping higher. Yes, I think that everything is looking quite good here. Now, oof, whoa, sorry, apologies. Went into the wrong, pressed the wrong button. Natural gas, ladies and gentlemen, natural gas. This one is currently trading already below the psychological 3 level. So, yep, I think that if we do continue to do so, I think further declines are possible. Oh, ladies and gentlemen, so the crypto world now. Honestly, it is a roller coaster ride. This is just like up and down, up and down. It's currently undecided what he wants to do. Does it want to go higher? Because looking at Bitcoin, it seems like it wants to go higher. Although I said to you on, I think it was Wednesday, that look, as much as I would like it to go higher, I have to admit that there is still downside potential towards the 57, 58 territory, somewhere around here. I think it's a good target, a good area of support. But hey, right now we're seeing a reversal back up, but I need to see a push above the 71,000 zone, somewhere around here. I need to get a push above that. If I can get a push above that, great. I'll go for some higher levels. Bitcoin Cash, one of my favorite ones here. This one's stuck here, and well, it's forming something like a bullish flag. So we had our pole, we have our consolidation here a little bit. So it does look like a bullish flag, to be honest. So I'm not rushing into anything, certainly, but yeah, it's something to keep in mind. Ripple is. Okay, look, it's a little bit of a mess, and I do want to remove all the drawings and have a fresh look. Similar story. After seeing such a reversal back up here, from the 1.1185, Ripple is holding on. Ripple is holding on here, and it's just, it seems like it doesn't want to drop below this 1.3415 area. I don't blame it, because why should you? So yeah, for now, I'm cautiously bullish, and I honestly this is one of the difficult ones for me, because on one hand, you want to see this one going higher. On the other hand, you do understand that there's downside risk here. With Ripple, similar story. If we do fall below the 1.3415, yeah, I'm going to lean a little bit more towards the downside. Ethereum, my problem with Ethereum is that it is struggling to stay above the 2000. I mean, it's struggling to stay above the 2000, and if it climbs back above the 2000, okay, great, I'll consider some higher levels. But at the moment, it's pointing a little bit more towards lower areas. Ethereum Classic, similar story. Everybody's drawing the same picture in a way, but with Ethereum Classic, it's near a key area of support, which is around that psychological 8 level. A drop below the psychological 8 could lead to some further declines. Litecoin trying to climb back up. With Litecoin, I think I need to redraw a few things here. With Litecoin, I think it's this level that you need to keep in mind. If we do fall below the 50.24 zone, yep, I think some upside here could be possible. We could see some nice moves towards the 50-day EMA, shown as the green line here. Very quickly on Dogecoin. Dogecoin is flirting with the psychological 0.10, of course. So not giving up on the bulls here, but also not giving up on the bears, because we are in such a stupid situation that we're waiting for some sort of a trigger that could clear one of the levels here that I have. Polkadot. Okay, 130 has been established, and it seems like it's like a level that is awesome, that the crypto is oscillating around, and I think that yeah, for now we're kind of stuck in this little range, I would say. So let's not do anything. Okay, let's not like touch it and just observe the price action. So long story short, for now I will be just kind of waiting for the exit here. Either I need to see a push somewhere above this barrier, the 1.4379 zone, or I would need to see a drop somewhere below the 1.1738, and then we'll take it from there. And finally, Tron, to finish off the session here. Look, Tron, I like Tron a lot, I do, and it's currently stuck here. So with Tron, if you're looking for some higher or lower levels here, then certainly wait for a break above the 0.2852 area in order to consider higher levels. For the downside, I think that the better option here is to wait for a drop somewhere below this 0.2785. Yep, right here. And then we have a bunch of areas of support here, which should not be ignored in my opinion. We should just go slowly with them and test them out, and then we'll see. But at the moment, certainly this looks a little bit more bullish than bearish, to be honest. But yeah, I think Bitcoin is going to be determining where everything goes next. So, ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. I hope you found this useful. Too bad that you didn't have any questions for me, but hey, maybe next time. But look, stay safe. Like I said, do not have any positions open and holding them during the weekend, unless it's a really minimal position and if you have your risk management in place, so you know what you're doing. But certainly at the moment, like I said, it's a tricky one right now. So hey, for now, let's see what's going to happen here, and then we'll go from there. Ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments, everything. So as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you on Wednesday, actually, because yeah, Monday I'm going to be off, but yeah, I'm going to be seeing you on Wednesday, ladies and gentlemen. So have a beautiful weekend, have a great trading day today, and I'll see you later. Bye-bye.